for joining us today. I'm Leah Walzak. I'm the founder of GemHaus. Before starting GemHaus, I spent over a decade in real estate and managed more than 75 million in real estate assets. Mostly they were short-term rentals. During that time, we did a lot of deal underwriting. So I built GemHaus to make it easier to quickly determine whether an investment property actually cash flows or not. So today we're going to walk through how to properly underwrite a short-term rental, what numbers actually matter, and some of the common mistakes that investors make when evaluating properties today. So feel free to use the chat box if you have any questions. And joining me today is Jeremy Holden.
Thank you so much, Leah, for the opportunity. So I'm Jeremy Holden, everybody. I'm located and based out of Metro Phoenix. I'm the leading short-term rental realtor in Metro Phoenix and Scottsdale. I own and manage 9 short-term rentals in the area as well. I'm the owner and operator of HFVM, which is my short-term rental management company. Additionally, I'm the lead short-term rental educator at the Arizona Real Estate Association for Investors. It's an accredited place. My whole goal is to help investors make better decisions. Back in 2020 was when I got started. I didn't really know much about real estate. I just picked up different books and just read as much as I could. I wish there was a tool like GemHaus that existed at that point in time. But at that point in time, a lot of it was pen and paper and trying to piecemeal things together. After my first deal or two, I really made it my purpose to get a license and also help investors access the investment market on the residential side, leveraging my experience. So since 2020, I've done 36.2 million worth of deals to investors. Half of those, about 18.6 million, have been short-term rentals. And then here are some key statistics about my portfolio. So today we'll go through GemHaus. Like Leah said, at any point in time, if you have any questions, please feel free to interrupt me. Please use the chat function, and we'd be happy to answer any questions or commentary. So we'll get started here, and we'll go over exploring the tool. So in the tool, this is going to be the main page. This is the GemHaus main page. As you'll see here on the left-hand side, we can create new reports, which we will review. You can explore the map. You can also go look at the comp lab. From there, any reports that you had previously looked at, whether it's a zip code, whether it's a specific property in mind, all of that will be found on the left-hand side here to view as your library. In the middle here, you'll have several different pieces of functionality. The first is if you want to go look at a specific zip code. Let's say you and your realtor are looking at several different areas. This is the best place in the tool to go look at a high level market snapshot of what's going on in that market, which we'll cover. Additionally, if you have already gone through the market research of figuring out with your realtor which zip code and which area you want to go and pursue, at that point in time, you can then come to the property function, and it's as easy as pasting a Zillow link, a Redfin link, or even a property address, and GemHaus will do most of the magic for you and show you what its potential could be. So let's start with the explore function, which would also be the zip code. If we explore the map, we can then put in different sort of zip codes. Additionally, you can also access it from the main page. So I'm interested in the zip code 85210. What we would do is we press get analysis. And then at that point, it would provide us a map. 85210 is in Mesa, Arizona. I actually own some property there. I have clients that do as well. And it's an up-and-coming area for both long-term and short-term rentals in the area. What's really great about the tool is it provides you some snapshot data. What are the median rents? What is it doing long-term versus short-term? What's the median list price? Additionally, we'll give you a market report. How many days are things on market? How many total properties were analyzed? How many active listings? And how many sold properties? And then it provides summaries in each section as well. These are great metrics for you to use, specifically when looking at different properties. Your realtor may or may not be an investment expert, What this tool allows you to do, specifically in the Explore section for the zip codes, is very quickly, GemHaus will empower you to have all the key data that you'll need to have a general understanding on what's going on in the market. So let's take a specific property for interest. I picked out 535 West Pantera Avenue in Mesa. What's very interesting, it's a 4-bed, 2-bath, 2,000 square feet, and the price is 535. From what I can see there, comparing to GemHaus, the median list price is 419 and the median sold price is 411. From there, I can look at what the average rents are, what the property tax is, and then from there, I can also look at different sort of market trends on whether or not prices are going up or down year over year. Is the market hot or cold? How are rents trending? What's going on with interest rates? All of this allows you to have a very good understanding going in on what a zip code is. But again, this property is above the median list price and sale price. So what's great about the tool is not only can you go look at properties that are specifically at a zip code level, but we can actually go look at that property at the property specific level. So if we create a new report, we're able to then go plug in this information. Now at this point in time, it's going to generate a report. And what's fantastic about the tool is the tool will allow us to answer several questions like this. What is the purchase price? What is the revenue? How much money is it making? Is it bringing in $2,000 a month long term, or is it bringing in $4,000 short term? What are the operating expenses? What are property managers going to charge you? On average, what should I be allocating towards, property maintenance, repairs, any sort of maintenance? What do the utilities look like? If we're looking at a property in East Texas, that might look very different than South Florida. And in the same respect, something in, South Philadelphia might look very different than up in Vermont. We're also looking at insurance and taxes, two variable items that are going to differ from market to market. Consumables, if you're on a long-term rent, are you in a position where you're providing consumables to your renters, or short-term, which is very common? Do you have consumables like oil, toilet paper, mini toothpastes, things like that? And then additionally, we look at financing. How does financing look? And this is what the dashboard will look like, which we'll get into. But what's really amazing about the tool is even if you do not have any connections in that local market, GemHaus will still empower you using different sort of research and algorithms going on in the background with Leah and her team have developed, will allow you to really become an expert and have an idea of like, what can I expect for utilities? What can I expect in maintenance, taxes, insurance? Same thing with debt financing. It will basically put in like what you can expect on the financing side as well. So we'll dive into that. So if we look at 535 West Pantera Avenue, it's a 4-bed, 2-bath. So let's put this into context. We've gotten pre-approved, we have a realtor we really like, and we're super excited to go buy a short-term rental. The problem is you have the area down where you want to buy because it's really close to this new football stadium, or it's really close to the entertainment district, or there's a ton of kids sports there, or maybe there's spring training. The problem is you ask your realtor for the rents and they provide you the long-term rents. What is fantastic about GemHaus is that we can go get the short-term rents. So if we go to the report that we plugged in, we can see that GemHaus automatically pulls in all the key details. No spreadsheets, no pen and papers, no mess. 4 beds, 2 baths, 17 square feet, built in 1979 on a 739 lot. We can see based on it that it has granite countertops, renovated kitchen, stainless steel sink, and even a pool and garage. And what's really cool is if we want to go confirm those details, it's all there. There's our beautiful pool. There's our new tile floors. And there are stainless steel appliances, our granite countertops. So what's amazing is with the stroke of just a few keys in your keypad, GemHaus can really pull a lot of the pertinent details without you having to feel some stress about it. So if we go back through it, from there, we're in a spot where GemHaus will make some key assumptions. What's the property selling for? 535, which we can change. Let's say you and your agent are going to offer 515. You can see how all that changes. Same thing with the down payment. Maybe you're putting down 10% on a vacation home loan. Maybe you're in a position where you have a sizable down payment and you're like, I want to put down 25%. What's really awesome is it's super customizable to every single user. And again, it does not include any spreadsheets. It's all saved here on the tool. Same thing with the interest rate. And then from there, the long-term rents are just being pulled in from what the data will show us, which we'll get into. Here at a high level, you can see that after your principal, interest, taxes, insurance, and even operating costs, this property will lose $325 a month, specifically on a 12-month lease at your average lease term. We'll go over this in further detail, but it's assuming that the property is bringing in $33,000 a year based on the comparable rents that the tool has pulled. Now, contrastly, for Airbnb, it also pulls in the comparable rents. Leah and her team have not only engineered an algorithm to pull the long-term rents, but it also does the same respect to short-term rents. So on the short-term rents, you can see we're looking at a gross annual revenue number of 71.7. From there, you can see it's 15.15 above your short-term, your long-term. And additionally, after all of your expenses, you're looking at about $1,190 per month. What's really fantastic about the tool is now we've gone through 85210 to see if that's a market that we've been interested in. From there, we've come in here and we've adjusted our down payment, our property value, our interest rate, so on and so forth to really customize the deal. Within 5 minutes, we have a really good idea of would this make a good long-term rental? Would this make a good short-term rental? We're going to focus on the short-term rentals today. But what's fantastic about this is right off the bat, we can see very clearly if we're looking at average revenue numbers and average comparables, will this make sense? And it's very clear that this warrants us to dive a little bit deeper. What is also super important here is your lender coverage. Your debt service coverage ratio, your DSCR, is typically what most investors are using. A DSCR loan is a specific loan program that looks at the debt service coverage ratio of the property. So what this is saying is that the rents on the long-term rent only cover 0.87% of the mortgage. That means your rents don't cover your whole mortgage, only 87% of it. Conversely, your short-term ratio is saying that your revenue will cover about 1.5% of the mortgage. The key number for most lenders is at least 1.0. If you can achieve a 1.0, which the short term does, but the long term doesn't, you shouldn't have any issues getting financing for the property. That doesn't mean it's a good investment, but what it does mean is that it should be financeable, which is half the battle in most cases. So if we go down further, we then have our comparables. Now, I think just like any other shrewd investor, your question would be, where are you getting $33,000 a year from? Where are you getting 71? How can the short term be almost double, even more than double? And that's what's fantastic about the tool is that Leah and her team have really developed such a software that we're going to show our work. And that's what the tool does. It will show you what the estimated value, home value is. It will show you the comparable rents for the long term. It'll even do that in the short term. And what's awesome is you can go through each one, see the houses right here, and you can see we're doing a 4-2, another 4-2, another 4-2. I keep going, and you can see we're at 4,800, 4,400, 6,100, 8,900. The tool's job is to show you honestly what all of the comparables are. Now, it doesn't take into account whether or not we have a seasoned operator or a new operator. Maybe one house has been up and running for a few years and has a million reviews where maybe others don't have as many. It's just going to show you right off the bat a baseline on what the revenue is going to be due, and then it's on us as investors to go see what's going on. Right here we have number one here has 4,500, number two has 8,900. That's great. That provides us an opportunity to see how can we be closer to an $8,900 a month property versus a $4,500 a month property. How would we do that? If you come here to view listing, the tool actually will take you directly to the Airbnb link. As we can see here, this property is 8 guests. It's a 4-bed, 2-bath. And the photos are nor here nor there. Let's go compare that to a property that's doing $8,900 a month. Look at that. Beautiful pool. It's heated. We have a big hot tub and a game room, just photographed very nicely, and it also has 133 reviews. Same guest count, same bedroom and bath count. The difference is in the marketing. Look at the difference of this house versus that house. And I can't stress enough with the investors that work with me as their realtor or my clients who come to me to property manage their house is the data. And Leah and her team have artfully engineered a product that shows you honestly, without realtors fudging the numbers, without property managers being salesy, an honest and transparent tool to show you what the numbers look like. And it's our job as investors to go through the data and say, what type of experience and what type of short-term rental do we want to create? Do we want to create a $4,500 a month Airbnb, or do we want to create a $9,000 a month Airbnb? And that's how you can leverage GemHaus, not only to run the numbers, but also to help you with your operational efficiencies in setting up the house properly. You can just see right off the bat that the tool has not only showed you the financials from a gross perspective, but it was also showing you what did the listings actually look like, so you have a little bit of context between the numbers. From there, that's where we get our average revenue of about $6,000 a month. Now, if we want to, we can go into further detail in the comp lab, which we'll get to shortly. The property here as well will show you the list price in the MLS, an estimated monthly payment of your principal and interest, and then from there it'll show you an estimated value of the home. Now what's really cool is now we've gone through the revenue and we've covered this piece. Now let's look at the operating costs. If we come here, the next question, so we first have said, well, what if I don't want to offer 535? What if I want to offer 515? What if my down payments change? So we've already tweaked a lot of the major inputs. From there, we've then covered, well, how are we getting gross revenue? So from there, we've covered how are we structuring the deal? How are we getting to the revenue? The next thing is the expenses. Now, from an expense perspective, that's where the calculator is. Just to repeat, it's up here on the right-hand side. From here, it just pulls in the estimated rents for both short-term and long-term, the property value that we're offering. Leah and her team pull in the property tax and also the insurance. The insurance is done specifically through a super in-depth algorithm that is trained to get you a pretty darn close estimate on the insurance. From there, it then pulls in the other key terms that we put in, like the 25% down and the interest rate. And then from there, we're able to, tinker around. We can put in a dollar amount if we have to do a renovation. Additionally, if there's an HOA, we can put in an HOA. For this property, there isn't, but let's say there's $200 a month, we'd be able to plug that in. And as you can see, once we plug in new inputs on the right-hand screen in the investment calculator, it then automatically updates on the left side. From there, let's say we're working with a long-term property manager that charges 8%. You'll see it will automatically update. Even things like vacancy. Then the major expenses are also outlined. We are looking at electricity, water, landscaping, pool maintenance. What's really great is that the algorithm that Leah and her team developed also will give you a very close estimate on all of these. And obviously, something in Arizona is going to look very different from Vermont, and something in Vermont is going to look different than something in Washington State. And what's amazing about the tool is that state to state, city to city, these numbers will flex and will adjust based on the expenses that an owner or investor can actually expect in that market. So what's fantastic is you don't have to own any property in Seattle. You don't have to own any property in St. Louis or even in Key West. Is the property right off the bat will give you a good idea of what your electric bill what your water could look like every single month. And that's without doing any networking, without relying on any erroneous information from, you know, any word of mouth or from your realtor. This is all algorithmic based off of like historicals. Now, let's say there's some additional costs, like pest control. You can put that in as well. So the tool is extremely configurable. Let's put in for pest control $75 a month. As you can see, the report's already updated. And from there, the adjustments are then saved. So then from there, I press show impact. And then from there, we can see based on the adjustments that we made, did that help our monthly payment? Did it hurt our operating income? So on and so forth. And then from there, we'd be able to exit the calculator and those adjustments are saved. Now, what's great is whether you're an investor, a realtor, or even a property manager, you can then take the report and then download it as a PDF. Now, let's say we were looking just at short-term rents. We can do short-term only, which is fantastic. And we would then wait for the download. And right off the bat, we have a beautiful report that shows you the property, all the key pertinent details, then the cash flow number, all stuff that we just went through, including the DSCR. It shows all the comparables from a value perspective. And then from there, it shows us what our key investments are. So our down payment, our closing costs. If we had any rehab, we would have put it on the rehab line under the investment calculator. And then from there, we have a profit and loss, income, management, insurance, taxes, consumables like toilet paper, X, Y, and Z. Now, the great part about the investment calculator is that you can add in expenses as needed. So if your business is a little bit more detailed, that's where GemHaus provides the flexibility to you to really make this an all-in-one encompassing tool. Now, let's do another example. Now, this was a 4-bed, 2-bath. I pulled out another property on Drew Street. Now, Drew Street, if we go on the map, is in the same zip code as Pantera. Pantera is right here in the south of 85210, and Drew Street is a little bit further north. Now, they're both in the same zip code. One is 535 with a 4-bed, 2-bath. Now, let's say you're with your realtor looking in this zip code, and you determine with GemHaus that 85210 is where you would like to purchase an Airbnb. And through your search, you now found Drew Street, a 6-bed, 3-bath with 2,400 square feet. This looks like another property to evaluate. And that's where we would come right back into GemHaus and we'd start a new report. Now, using the tool, we would go to property, we would copy and paste the address in just like we did on Pantera, and we would generate a report. Six beds, 3 baths, renovated kitchen, bathrooms, flooring, electric panel, pool. Again, GemHaus comes in clutch, and it looks exactly the way the description said. Remodeled, has the nice light oak floors, stainless steel, new counters. Great. Right off the bat, we're looking at 500. Let's go apples to apples and put 25 down. Now, what's really cool about this is we can go and compare this side by side with Pantera once we're done. But right off the bat, we can see here that in both scenarios, we have cash flow. So if we go back to Pantera, your long-term rents would be negative 400. You'd be losing money every month. Where on the short term, you'd actually be making over $1,000 a month. Now, this would warrant more discovery if you were interested in short-term rentals, but if you were a long-term rental investor, probably not. Now, if we look specifically at Drew Street, we're in a situation where it's making $1,500 a month as a long-term rental and also $6,500 as a short-term rental. If you are the type of investor that has gone through a risk profile, meaning what type of investor am I? How much risk do I want to take on? How much do I feel comfortable investing with? Right off the bat, we're in a situation where if your short-term rental doesn't work, you would also be able to make money as a long-term rental. Now, these are two properties at a very similar price point, and one of them is outcompeting. And that's where it will help you make sense as you're looking at properties with your realtor to make some assessments to say, how can I look at a 4.2 versus a 6.3? And right off the bat, we can see the 6-bed, 3-bath was making more money. And that's where this tool really can help you take two different sort of products, two different sort of houses, and really compare them on an apples to apple basis to make the best decision possible. So let's dig more into this. Let's go to the short-term rental comps. Now you can see here we have our 6-bed, 3-bath, 6-bed, 3-bath, 6-bed, 3-bath, 6-bed, 3-bath. Now the interesting thing is, in the last one the spread wasn't too far. It averaged 6,000, and we had some that were about 4,500, 5,500. We had some that were 6,000, 65, 7, 8. They're all very close. Now on this one we have quite a lot of spread. Again, the tool's job is to transparently show you the data that should be there. One 6-bed, 3-bath is doing 4,000, while one of them is doing 15,000. So just like in the last exercise we did, let's go take a look. Okay, this is the 6-bed, 3-bath that is currently doing about $4,500 a month. 6-bedroom retreat, pool, casita, sleeps 15. It has some photos of the backyard. It has 2 reviews. Let's go look at the property doing 15,000 a month. Wow. Luxury oasis, pool, sauna, spa, theater, games. What's fantastic is GemHaus has now led us to see an analysis on why is one house doing so much better than the other. And it's very clear that a property with 59 reviews, with a fantastic game room, a movie theater, a beautiful mural outside a fire pit, with cabana-like resort-style photos, an amazing bedroom, is likely going to outperform a house like this that has little reviews and also not such great photos. That's where, again, we use the tool as investors to empower us with the data and to see, out of the comps, what experience do we think our investment can create. So let's look at another example. Let's look at the one doing 11,000. Again, we have a property that has 62 reviews, beautiful front yard, very welcoming, an amazing pool feature, really nice fire pits, and it's also a walk to a lake, has a hot tub, and has a heated pool. So this is where we use GemHaus to figure out, it's very clear that we should probably have a pool. We probably need to have some games. We probably need to have a really good rating. And it's going to take some time, but the tools showing us very clearly that folks that are on Airbnb are looking for a luxury experience with a pool, a sauna or a hot tub, and they're looking for great service. Now, let's say we are looking to really key in on this. That's where we can then go to the comp lab. I think it's really important to look at a property like this as an example that has 6 beds, 3 baths versus a 4-bed, 2-bath, where the 4-bed, 2-bath doesn't have so much spread, right? 4,000, 6,000, 8,000. The reason being is that there's a lot of 4-bed, 2-baths that are created. Home builders, for the most part, are building 3 bed, 2 baths, 4 bed, 2 baths. That's like the most popular product type for them to sell, and they're in the market of making as much money as possible. So they're going to try to sell homes that have the most marketable value, which would be threes and twos. Builders don't really build 6 threes, and that's where the data gets a little bit different because there's just less information to work with. But what's fantastic is that GemHaus shows you everything that's available. So if we say that we have a funky looking property, like a 6 bed, 3 bath, and we really want to hone in on it, what we can then do is come to the comp lab. And what the comp lab will allow us to do is to actually create a data set on our own. So what we're doing now is we're going to look at short-term rental. And this on the map is exactly where Drew Street is. So what we're going to do is we're going to say, give us anything with 6 beds to 6 beds, 3 baths to 3 baths, with a guest capacity from 10 to 16 guests. What we can also do is say, give us anything with, let's say, over 25 reviews or 30 reviews, because we want things that are stabilized. And let's also look at stuff with a pool. From there, we can go to see results. And then from there, the tool will pull. As you can see, we have 15, another 12, another 6, another 11, and a 4. So what we're going to do is we're going to go through each one of them, and we're going to see whether or not we want to count them as comps. I would say this is an exercise that typically is done by more seasoned investors, like myself, where I'm very confident in what a property's revenue can be, where I can go in and say, which comps do I want to use, which comps do I not want to use. So this one is doing 15, love it, let's keep it. I think I can create this experience. Again, 42 reviews, Elite Vacation Paradise, has a game room, putting green, fantastic, let's keep it. This one in Tempe, not so much. 12 guests, 6 beds, 3 baths. This isn't really a product that I would put out personally. So right off the bat, I would go to the one in Tempe and I would press X. Now let's go look at this one doing the seaside one that we saw. Again, this isn't so much a product that I would put out. A lot of my homes are like tailored and curated for a luxury experience. A lot of these photos are shot with an iPhone. This isn't really, the type of product that I would put out. It's a nice home, but it's currently being mismanaged. As you can see, there's 2 chairs here, another 4. If it's going to host 16 people, there needs to be more chairs, So in that scenario, I would also exit out of that, and I'd say I'm really comfortable with these 3 comps. Now, let's say I want to find more comps. Let's say I was comfortable going down to 5 beds, up to 7 beds. I can then press see results, and then more comps come in. So that's the great thing about the tool, is that it's very configurable. And then from there, what I would be able to do, if we go back to the 6 to 6, is I would then say save and return, and then it would automatically update the report. Now, let's say I'm a property manager or an owner that uses this tool a lot. What is really great about it is that you can actually save filters. So let's say I was looking for a client or for myself in a specific zip code or area at any homes between 5 to 7 bedrooms and 3 beds to 3 baths. I would actually be able to save the filter here as Mesa 5 bed plus 3 bath with pool. And I actually can come back to this, which is awesome. Now, if we were to come back to the property, that is how we can use GemHaus to, 1, get a high level overview of what's going on in the market. Secondly, it would allow us to then hone in on properties like Pantera or Drury Street. Then it would allow us to make decisions on, okay, well, it looks like in Pantera's case, it's going to lose money as a long-term rental and make some a short-term rental, or maybe we keep looking with our realtor until we find something better, And voila, we found something that has an option A as a long-term rental and B even as a short-term rental. To summarize, it will then come in and provide you comps. And if you want to go in and update the comps yourself, you can in the comp lab. And then lastly, to get a full pro forma, you would come in to update your calculator here with your different assumptions. You would see an impact, and then from there, you'd be able to download PDF. And then at that point, you can then compare apples to apples and make a clear decision on whether or not the properties that you were looking at, whether it's in Kentucky, West Virginia, or here in Mesa, Arizona, whether or not they would actually make a good long-term investment. I'm gonna pause for any questions. I'd love to get everybody's thoughts on this. If anybody's actively looking at any deals, I'd love to hear what you're looking at and how we can help you use GemHaus to help you make a better investment.
Thanks, Jeremy. It looks like Ashley has a property she wants to check.
Okay, let's take a look. Thank you, Ashley. I'm gonna just look at this, Ashley, as if I'm looking at it as a realtor, doing it for my clients. So we're first gonna come in here. So we have a 4-bed, 2-bath, 2068 square feet. There's no HOA, which is important because that's an item that we'd have to put in as an expense. So let's plug it in. We'd go to new report, and then from there, the property will pull up. Majority of it's been renovated. Kitchen, private suite, stainless steel appliances, with garage and a pool. Yep, all of which check out. Actually looks like a current short-term rental. Nice turf, nice kitchen area. Okay. Ashley, if you could share in the chat um, what your estimated down payment would be. Are you using a vacation home loan with 10% down? Are you using a conventional investment loan with 15 down? Are you using a DSCR loan or a different investment product with 20 or 25% down? I want to fine tune the numbers for you.
Let's just do a 20%.
Okay. So right off the bat, we can see that for long-term rentals, we're in negative cash flow, which is normal at this purchase price in Scottsdale. That shouldn't be a surprise. Uh, for cash flow on the short-term rental, we're looking at 1,300, which is nice and healthy. That's what we're looking for. From a lender's perspective, if you're going to get a DSCR loan with 20% down, we need to exceed a 1.0 ratio, which is great. If you actually exceed a 1.25 ratio, the pricing gets better. If anybody needs any lending referrals, just feel free to reach out to Leah or I afterwards and we can provide you guys some names. So if we look at the short-term rental here, it looks really healthy at 8,900 a month, and we have plenty of comps here. 4.2 at 5, 4.2 at 7, 4.2 at 4, 4.2 at 12. So I think the best part of the exercise is what we've been honing in on. Let's go see what the difference between a $4,000 a month house is versus a 12. This is really where the power is in GemHaus, guys. Please do not rely on your realtors to be providing data unless they're coming to a tool like GemHaus to provide you reports. It's really important that you guys take control of the investment and empower yourself to feel comfortable with your numbers. So this is the house that is doing about 4,000 a month. We have a blurry iPhone photo. We are Ellie Home Slice. God bless her, is not a super host. She has under a 4.8 rating, which is a big no-no. And the photos are all taken pretty blurry with an iPhone. There's not much resolution. It's not very professional. Probably checks out why it's doing 4,000 a month. Now let's go compare this to a property that is doing 12,000. Wow, look how crisp these photos are. Beautiful game room, accent wall, cabana chairs that make you feel like you're in Vegas. We have an outdoor space that's super crisp and looks like a Mexican resort. We have a little outdoor bar, a golf game. They are super hosts with a 4.87 rating with almost 200 reviews. It's very clear that GemHaus is showing us that these are the type of properties that will make a lot more money. And they're the same properties. They're right around each other. They're 4.2s right near the subject property, right? So what's fantastic is that you can then extrapolate this information to say, okay, like I'd like to create that experience. Obviously, like you need to work with a realtor who can help provide you with all those connections to, do these accent walls, that has the interior design team, that has the muralists, that has the connections to all the furnishing. But at least GemHaus is providing the basic information that if you want to hit an absolute home run, it's there. Now, let's say we want to go into the comp lab. Excuse me. If you want to go to the comp lab for the specific property, you would press comp lab here up at the top, and then everything will move over. So let's look at 4.2s. Now, let's pull up something that's closer to like 5 miles. And let's go to short-term rental. As you can see, the filter that we created earlier is saved, which is awesome. Let's say we want to fit at least 10 guests. And let's say we want to really hone in on 4 miles away. We want something with a pool. What's great is we can do the same exercise and go through everything. Now, you might elect to say that 3,000 a month is an outlier, 2 grand a month's an outlier, 4 grand a month's an outlier, 12's an outlier, 4's an outlier. But it's very clear that we can get between like 7,000 and 9,000 a month. I think that's where the comp lab really allows you to really tie everything together. Like you start with your market report in the Explorer and you look at a zip code. Then from there, you're able to go and generate a report for a specific property, just like Cortez. So you've now said 85260 looks good. And now we're going to go and look at Cortez, and then this report pulls up. And then from there, if you say, wow, these numbers actually look really good, I'd be interested in making $1,300 a month. Then from there, it might warrant you coming in here, looking at the comps, picking out what you think is realistic, customizing the report, and then coming into the comp lab and even honing in on that further. Now, I always tell investors to find a good deal usually takes, 6 to 8 weeks, especially if you're working with a realtor that does not have short-term rental experience. My clients typically take 3 to 4 weeks just because I can direct them to show them, hey, this is what works in the market. I support it with GemHaus data. But GemHaus should really help accelerate your process, as it really, Leah and her team really are giving you a lot of the tools to at least plug in the holes in the financials, create projections, and even see what some of these fantastic homes are doing so you can recreate those experiences. The next piece from there is partnering with the right realtor, property management team, interior designer, so on and so forth, to actually bring the property to life. I know that was long-winded. Ashley, I hope that was helpful. If you have any other questions, please provide in the chat.
Ashley was asking how much the product is.
That
So
would be you, Leah.
yeah. Okay, so the product is $59 a month for individual subscription. You can purchase annual, that takes off a couple of months at $4.99. You can also purchase individual credits if you want to go that route, and it's about $19.99 for. Oh, there we go. Thanks, Jeremy. So the pricing is actually on the homepage, and if you have any other questions about that too, you can just let me know.